as we always do with Europe, we always want to start with the aggregate and look at the Eurozone in general. So as we've been talking about, new car registrations have continued to miss estimates and slow down. We've seen an issue on spending. We've seen an issue on production, construction. So again, it's not crazy to see that new car registrations continue to remain weak, and that we don't see that changing really anytime soon. And then as we talked about in August, trade balances continued to weaken. We saw construction output that has gotten softer. That has gotten better in September, but now starting to get a little bit softer again in October. So it's all a matter of timing. The biggest issue right now is that CPI, where year-over-year CPI was expected 3.4%, came in at 3.4. Core year-over-year was expected 1.9, came in at 1.9. And then that CPI month-over-month continues to accelerate and come in at 0.5. The problem is we're now hitting an acceleration point. So here you're seeing some of this elevated levels that are going up, and it's starting to create, not panic, but you're starting to see a bit more of how do we address some of this inflation after, I guess you could say, wishing for it for so long. And what is it going to be driven by? So energy prices obviously boosted euro area inflation, and it's not stopping. And it's not going away either. So the question is going to be, when you look at energy, here that there's energy, fading away, but it's fading away in just when you think about some normalcy coming out of winter. But when you look at gasoline prices, you look at diesel prices, there is a lot of overhang that remains in that market, and it's still getting made up. When you look at food and alcohol. So food continues to be, which is why when you look at that forecast, things are continuing to trend up, and now you're essentially overshooting the target by a wide margin. And the hope is that it gets better because of energy, because everything else is really getting worse. And that's a tall order. That's a lot to ask, because if you're seeing energy coming down, is it being driven because supply responded, or because you're seeing demand come down, which then leads more into, are we in a recession? Are we into a much bigger slowdown, which again will become a bigger overhang for the underlying economy? So then when you look at the survey for Eurozone, the CPI year over year, the latest was 3.6%. So you see this, again, big shift up as we've seen those prices increase. And then the Eurozone 2022 CPI continuing to go up back to 1.1%. And there's a view that this will likely get over 2% by the end of the year. All the while, CPI minus PPI spread is at the widest it's been since 1999. Again, it could be further, but again, just looking at it on this in terms of the scale, which just means that there's going to have to be some pass on of this cost. Because when you look at producer price index, prices have exploded because input prices have gone up so much, and you have to pass this on. Do they pass it on into the export market, and how much do they pass on internally? And that's where the local consumer, and to be fair, the European consumer is not as strong, is not as well off as the US consumer. So this is going to become a much bigger issue, which is why we've continued to talk about expectations in Europe were way too high for what we saw coming, which again is playing out right now. So then when you look at the Euro area price watch, inflation accelerates to the highest level in 13 years. ECB's Lagarde says inflation spike is largely transitory. Monetary policy is committed to preserving favorable financing conditions for all sectors of the economy. The Eurozone consumer prices rose 3.4% in September, the highest rate in 13 years. So again, now, does the energy side pull back? Sure, you'll see some of that pullback, but look at core inflation. That is going up as inflation rates continue to pull up. And that energy number is not going away tomorrow. It's not going away in November. It's not going away in December. So what is transitory? What level do we say, some of this is going to be sticky, or have we destroyed the consumer, or has the consumer been impacted to such a point that inflation is going to come down because of demand destruction, which creates a much broader issue on the backstop of China slowing. China's a big buyer of Germany. China's a big buyer of Europe. As they slow, they're already seeing exports slowing. So who do you pass off this price increase to if you're essentially pinning the consumer down and they're unable to meet that new demand? All the while, this is looking at just the power shock. So when you look at Spain, Spain is the canary in the coal mine, because they're Europe's emerging. Spain relies more on imports for its energy needs than most EU nations. So you're getting kind of that litmus test of where is the pricing right now. And Spain is the one that is showing you just how bad some of this pricing is and how it continues to remain at this elevated level with little in the way of stopping it. Again, you could adjust policy, adjust some of the tariffs that have been weighed. But again, these are some of those underlying problems that we continue to see. So now, what is under pressure? Well, let's look at the German producer prices are near 50-year high on energy costs in September. So when you look at gas prices, so German producer price inflation is the highest in nearly 50 years. Producer price inflation rose to 14.2% in September, up from 12% in August. This was the highest annual rate since October 1974, with prices for gas rising 58.9% and prices for electricity supply by 23% from a year earlier. This is not sustainable. So something's going to give. It's just what is going to give. Is the consumer going to be like, nope, I'm out? Or are they going to be met with new supply? And it'll be a mixture of both, where they're going to have to adjust the supply issue while the consumer says, I can't afford to continue to do this, and I'm going to have to step back and cut some of my spending. So then when you look at the German 2021 consensus GDP forecast, it continues to drop. Not surprising, given all of the issues that continue to reverberate through the system, as we keep talking about, as we keep highlighting. So then when you look at Spain and Italy suffer the first blow, as their electricity costs and gas costs are the largest out of everyone else, which again is just showing how this is going to continue to impact the underlying economy and again bring down some of these estimates. And when we look at estimates, construction confidence has bounced up, but again, coming back down as construction output continues to miss estimates, continues to get pulled lower as we keep seeing this contraction, because we're just not seeing the demand as these prices continue to run unchecked. Which is why when you look at inflation and electricity, so let's look at the rest of the items. And this is where we start to question some of these underlying pieces, because electricity is 3% of that CPI basket, where the rest of the items are 97%. So yes, energy prices will come down, electricity prices will come down, but what does that mean for long-term inflation numbers? What does that mean for the long-term inflation? And yes, they'll come down, but you're seeing CPI explode higher, but you're saying that only the 3% of that calculation is driving it? No, there's more behind it, which is why we always question of what is transitory, what is largely transitory. Why is it largely transitory if a lot of these underlying pieces are driving it, not just what you keep focusing on? I agree, electricity should normalize. You'll start to normalize at a higher level, but you'll see it come down from these extremes. But the impacts aren't going away, because electricity is going to stay expensive. It won't be as expensive as today, but it's going to stay expensive, which is an input cost. So as that is an input into the underlying price to the consumer, it's not going to go away quickly. It's going to continue to hit on the consumer and drive down where this economic growth is going to shake out. So now that we've kind of gone through Europe, we need to shift now into Asia and the emerging markets, which are seeing similar issues that what we've just described on an electricity basis, on an inflation basis, which again is hitting global GDP growth or lack thereof. And what is that going to do for numbers as we close out 2021 and head into 2022?